The views expressed in this video presentation are my opinions and not necessarily the opinions of guests and others sharing or reposting this video. The content is produced only for educational and informational purposes. Do not regard any statements in this video as a recommendation to buy or sell any financial instrument. Investing comes with risk to loss of principal. Always conduct your own research and seek guidance from a professional investment advisor. I am not a professional investment advisor. I'm Dollar Will. I sound a little down because I'm a little tired. Watching those charts, but honestly, I'm not trading a lot right now. I already have I don't have any more money. All the money I got, it's invested in the way that I want it. And what I was saying is times like this when the market it's really tanking, this is where a lot of myths come to die. That gold is safe, housing is safe, you can diversify by spreading money all over the world, a little bit all over various places. All of those are myths. And it's crucial at this point in time that you take notes, that you save comments of who's saying what, especially the folks on television and in print, especially them, because this is the only time we talk a lot about red pill and blue pill. This is where you really get your red pill truth. Times like this, who's telling you to buy right now? Write that down, a bookmark. In fact, you might want to print it out because a lot of that stuff has a way of disappearing because those folks have reputations to protect. And you'll find that it'll be hard for you to find records that, this is what they said on this particular day. So you want to be taking notes, and you might want to ask yourself, who told you to get out? Who told you to get out? Who's telling you to buy on the dip? And that's not, how's that information working right now? Basically, the 80-20 rule applies to everything. It's a universal principle. It's not just a dating thing, So, and then 20% or less that know that the conventional advice is suspicious, suspect. That 20% are always going to sound like morons, and they get painted like morons by the majority. But you gotta be taking notes right now, So we're looking at, here's the S&P 500. The volume bar here was telling you something important. You see a diminishing number of orders as the price was going up. That's called divergence. The fact that the implication or the consequences of this diminishing or declining number of purchases or over time, the result of it is lack of price support. It's not enough people in the market to hold these price levels. So at the time when the greatest fools, in trading, there's a thing called a greater fool theory. Investing, the greater fool theory. It means that whenever you buy a stock, you're hoping to sell it to a fool greater than you in the future. And you're banking that somebody will love this thing at a higher price than you bought it. And then you find out that you're the greatest fool. Nobody but you thought it was worth this price. And then this happens. Okay. And this big volume bar shows that a whole lot of these people here that bought, that were hodling, they decided not to hodl. And that's how you get that. That's pretty ugly. And this is an index of the 500 largest company. This is the ETF of it, but of the 500 largest companies. So that's like serious dismay. Okay, you can't get more pessimistic than that. What happened to buying on the dip and the hodl and all that stuff? You know, for my long range perspective, you have to listen to the first video on my channel. I'm an Elliott Wave Theory trader. I have the view, and not just me. Lots of folks have this view that there's a larger wave cycle that we're correcting that's over 100 years long. Okay. You can watch in the video. You'll see me break it down, and I did that video in February of 2018. Okay, so everything in that video, I still believe now. All right. Housing was one of the leaders. I would say the strongest. Real estate was the strongest leader in that move since 2009, which is the strongest bull market ever that we've ever had. Housing, and the other strong one was healthcare. Okay. And so while we were rising, I said, this thing can't keep going higher. And so I just kept looking at the strongest items. Another strong one was gold metals in general. So I was watching for those kings of the market. Like when they die, it's over. And so DHI, which is a real estate company called D.R. Horton, they gave up the ghosts. This is a weekly chart. This is this week. So, and where's the volume? Let me get my volume. Let's see the volume. If you've ever said real estate is safe, DHI, D.R. Horton, is the largest real estate stock by market cap. So meaning that there's more money invested in this one stock than anything in America in the real estate space. Okay. They're getting out. Let's look at it on the daily. They're getting out of there. Tell them real estate is safe. If real estate was just like so safe, why aren't they buying? You know? So what they say on TV, you have to back that up with your own eyes. You look at it, you go, okay, wait a minute now. I can't believe that anymore. So you should, have your little notebook. This is where all the myths come to die. Let me go back out. We got wow, wait a minute. This is shocking. Okay, this is a monthly chart right here. And we've lost the whole month of February, but we did it in like a week. Okay. And this momentum indicator has to end up all the way down here. So I think we're going to take all this out. We're going to break this channel. And that's going to set out off an additional level of fear. Okay, as long as the price stays above this low that we've established in December of 2018, okay, as long as that happens, there'll be some people still, maintaining the view that we're going higher, that this is a buy on the dip figure. Some, I mean, nobody's doing that now, but at some point they might step in. But I wouldn't do it. It would have that's risky. But if it breaks this line, this support, and goes lower than this price, well, it would have to break this red line and go lower than this. That's going to make people rethink that opinion. that this is a buy on a dip and that we're going higher, because that will, going below this red line will break this trend. And like I said, DR Horton was the market cap leader in real estate space. So it would be somewhere when it gets around here. This would be the time, like this former high. This would be the area where if people are going to step in and save this thing, that's where you would see it. If that's what they're going to do. It's a lot of money to lose between here and there. Okay, this is palladium. It's in the metal space. This chart looks a whole lot stronger than gold. Okay, it's a quarterly chart. Each one of these is 3 months, and this chart goes all the way back to 1987. So palladium was rolling. Okay. Come down to a weekly chart. Okay, got a little red there. Let's come down to the daily. That's nasty. Every dog has its day. There's an exception for every rule. Okay. So even this is rolling over now. So when you have a trend this long, you know, I mean, this is a long time for anything to be making higher highs. So at a minimum, this thing is coming back to like this area. At a minimum, I don't see anything stopping it, giving all this back. So this would be taking us back to the 28, another time frame. It's a lot of money to give back. That's a lot of destruction in your retirement account. Come on. The beach ball of death. Let me go back. Maybe no, I can't really, it won't even zoom out to show me all of them, trying to remember my space. Okay. So maybe right in here, go back to like September of 2018. That's going to be almost a year, about a year and a half worth of gain gone. And I'm not saying that's the end. I'm saying I don't really see nothing that's going to stop it from coming down in this area. And so this high was 2,800, and we're talking about around, what's that, 1,100. So that's more than half. Gold, it's supposed to be safe. Daily chart. This indicator here has to come all the way down here. It's got to get down here. And this is a daily. It's going to take a while for that to happen. If it breaks, if the price goes through this red line, it's going to set off an additional level of panic, and the selling is likely to increase. Big volume spike. Tell these folks that gold is safe. See, I can listen to what people say on TV, or I can watch what they do. That's what technical analysis is. We don't care what people say. We watch what they do. Okay? People lie. Price is truth. That's another saying we have. Price is truth. When you spend your money, I'll know what you value. You telling me you broke, but you just bought a brand new pair of Jordans. Okay. All right. You owe me $50, but you just spent $200 on them Jordans. Now I know what's important to you. Okay. Let's see. This is one of the things I'm in. It's risky as heck. I don't recommend you do it unless you're with a financial advisor. This one goes up. It's a small cap bear fund. It goes up when the market goes down, but more specifically when the small caps drop, this rises. Okay. So in short, everything is pretty much gone to hell, with the exception of these risky bear market ETFs. And what's risky about them is they are linked to shorts in the futures market and shorts in the options market. That's what's so risky about them, because they don't always do what they say. Like, this is supposed to rise when the market is falling. On In theory, yes. In practice, no. At some point in time, the hodlers, the people who have a long bias, they'll stop buying those futures contracts as a hedge against their portfolio. And when that happens, the volume in these risky leveraged ETFs dries up, and the price appreciation stops. So it no longer will rise when the small caps fall, but in the early stages, it does what it's supposed to do. But at some point in time, the people will stop believing that this is just a dip and we're going higher. And when that sentiment changes, all of these leveraged ETFs, they get weird. This is where I live, okay, for better and for worse. But I watch it all the time. And this is definitely not something that you put your money in and walk away. This is not safe. You can't set and forget this. This ain't that kind of party. Okay, looking at this, this is a company called Pro Funds. It's one of the companies I really like. And they have, I'm going back to 11 days to the 12th of February. This is pretty much here, but what if I went here? Let me measure this from here. What does this say? January 2nd. Okay. I'm going to move this slider here. In the site I'm on, it's called stockcharts.com. And you go to the tools section, and you can, and this is free. I like free. I'm looking here, January 2nd, to correspond with this. I want to see what this move is and how these others compared during that time frame. January 2nd. Okay. Okay, Pro Fund Ultra is actually ultra short, Latin America. More specifically, what it really is, if you were to take the like Brazil or Latin America, if you were to take their stock market and you overlaid a symbol of their oil company, and their oil company is called Petrobras, it would look almost like a mirror. So as you probably heard in the news, oil has been taking a serious beating, because we have an oil glut all over the world. And so this fund shorts Latin American stock market, which is really highly correlated with their oil company, because they have a lot of oil there. And since there's a glut, they can't sell that oil at the prices that they normally sell it. And so betting against their country, which is basically betting that the price of oil will continue to drop. That play made 55% gains since the beginning of the year. So all that to say, not everybody is losing money. This is the 20%, okay, in that 80-20 rule, okay, who don't listen to what folks say on TV, They learn how to read charts and follow the flow of money. Okay, so you want to be on some red pill ish, where we watch what people do and not what they say. You'll join my Patreon. It's $10 a month. That's nothing. That's nothing. That's no money. Okay. So these here at the bottom, this is someone was betting oil would go up. Oil equipment will go up. This is Latin America will go. These are people betting that they will go up. The banks will go up. It's all going to hell. But the only way to make money at this particular moment is in leveraged ETFs. But that's going to change soon, because the consumer staple space is let me see if I can show it. It's going to hell too, but that's not going to always last. It's going to catch itself. The consumer staple space, think grocery store and drugstore. Okay. Food, health and beauty stuff, toothpaste, soap, washing powder, dish detergent, deodorant, hair care products, your medicine, your of course groceries. All right, so these are called staples, and now these consumer staple stocks are also overbought, as we call it, but they're gonna come down to a safe level, a sane level, and they're going to start rising. But we're not at that point yet. So some of these things in the market are falling for different reasons. And while we're on that subject, no, the coronavirus did not cause this. Had nothing to do with it. Now it's falling. It might be falling faster because of it. Maybe, and even that's debatable. But I'll accept it. Okay, maybe some people. I don't know. I can't believe that, because even if there was no coronavirus, we would still have this blood in the street, and seeing everything go down everywhere. I think that would cause people to sell anyway, even without a virus. Okay, the economy is slowing down. We have a glut of many things. I'm looking for that consumer staples. Okay, maybe it's. But it's just my opinion, y'all. All I say is take notes. I'm saying some outlandish stuff because I know I can prove it. I've seen this movie before. Yes, I have an axe to grind against the establishment. I listened to those guys on television in that decline from 2007. Oh, this is Palladium. Why can't I find? Okay, where is Staples? This is consumer discretion. That's like your car and the stuff in the shopping malls, like the clothes and all that other stuff you really don't need. That's the stuff that's going down. The opposite of that is the consumer staples. So usually when the discretionary stuff gets bought up, like your jewelry and your, like I said, your clothes, trips, traveling places, money usually will run from that space to the grocery store and drugstore, like I said. But even Walmart is overbought. So at some point, Walmart, Costco, all of that stuff is going to be the place to be. I can't find that Staples. I'm gonna give up. I'm just kind of tired. All right. Let me see, what else do I want to go over. I'll say stay tuned this weekend, or maybe it'll be in the middle of next week. There are few sectors that are should be near a bottom, and I will come out and make. I'm going to have my portfolio, or several portfolios on this channel. I'm going to announce what I think represent a good portfolio, and I'm going to try to do it without. I'm going to have some with the risky stuff in it, the leveraged ETFs, and then some without it. And of course, this is just for entertainment purposes. You should absolutely not rely on me or anything I say. You should talk to a financial advisor. I'm serious, because I'll say I'm going to do this, and I'll put a portfolio up, and I might not even come and update it to tell you, okay, the price is going in reverse. Why? Because I'm not obligated to do that, and my mind will drift, and I'll start concentrating on something else. And a lot of these portfolios are not even things that I own, so it's not like an urgent thing for me to make sure that if, like what I said today, that still represents my opinion 3 months from now. My mind will drift, and I'll start doing something else. But your financial advisor, it's their responsibility to tell you, okay, we need to come in and tweak this portfolio, because the prices have moved to such a degree that we need to employ a different strategy. So you can't really rely on YouTubers and stuff like that, because we don't have that, what's that called, fiduciary relationship or whatever with you. So you can take the information you hear on YouTube, and you can go run it past your advisor, and they'll let you know whether they think that's too much risk for you or not, and that type of thing. And I'll say, when you're picking your financial advisor, ask if they know technical analysis. If they say no, get another one. Get another one. All right. Let's see. It was something else I wanted. Oh, I know what I wanted to do. Man, I tell you, boy, getting old ain't no joke. Man, I wanted to see. I wanted to make the point that this is a global deal. Okay. Okay, this is a month. I can make it the same point in a month. You don't see anything. Okay, this is a BRIC. BRIC stands for Brazil, Russia, India, and China. This is the Emerging Markets Fund. So all of it's down for the last month. And I think this is on. What is EFA? I forgot what that is. I'm going to click this. I'm going to come back, and I'm going to show you how you can find out what things mean. All right. Europe down. Okay, this world shares takes all of the symbols of the world, basically put them in one fund. It's down too. So the world is down individually and collectively in his fund. All right. Pacific, what is that? IPAC. I don't know what that is. I guess that's Pacific Islanders and Latin America. They getting beat the most, as we went over before. This breaks down the European countries even further. All you see is red. This is for the last month. It's one world. You cannot save yourself by spreading your money around to different parts of the world. Now this one, at China, I said, okay, but it's almost gone red. So it's been heading down. It's just nowhere to run. It's nowhere to run. That's why I follow the currency market, because the currency market is many times larger than the stock market. The currency market, the foreign exchange market, is the dog. The stock market is the tail. And so the dollar is one of those places that's it's struggling for a bottom right now. It's going to find it real soon. That's going to be one of those places, and a few more places. Like I said, I'm gonna do a portfolio next week just to show, and I'm gonna put it on the record so you'll be able to compare what I said versus what what the folks on TV with those nice suits on and high salaries and all that, you know, so you can begin to figure it out, you know. Um, let's see. Sorry for being so down, dragging. Let me see who's rocking with me. Black Scorpion, Reigning Woman, CC in the house. Jay Charles, what's up, brother? You still on the road, Charles? Let me start from the top, see, because I'm sure there's some questions in here. Young Grizzly. Yeah, let the blood. It's blood in the streets. But somebody's always making money. I am still a fan to a degree of James Kramer on CNBC. I mean, I'm not always in lockstep with what he says, but he says someone's always making money someplace. He's right. Okay, so this is back when I had no sound. Okay. All right, anyways, I gotta stop having such a great time by myself. What's up, the Brain Trust? Brain Trust should be coming on at 8 o'clock. My goal was to be off of here by the time they come on. Okay. Thank you, Rainy, for putting up the link. Do I think the bottom's going to fall out? Absolutely. I think by the time all is said and done, I think we want to get back all the money made since 2009. That's what I really think. But not all right now. I think we're going to have a pause somewhere. Let me show you where I think we're going to pause. Now, I have reserved the right to change my mind. Technical analysis does not mean that we're like some Swami. You know, there's a little bit of science in how this thing goes, and we make mistakes and we correct ourselves as we go. I'm not saying that doesn't mean that we're changing our sentiment and being arbitrary about it. It's just that there's some rules about how far things fall. Okay, and the shape of that decline. There's some rules. If you want to learn those rules, join me on Patreon. Let me see but I will tell you my opinion of where I think we're gonna fall. I'm not. I gotta go back even more. What we're looking at here is the S&P 500. I think we're going to come in this area. Like we had this is called resistance, where when the price was rising, it kept hitting a ceiling in this area until it broke through. And it broke through, in this around, July 2013, in that area. I think we're going to come back down to this area of prior resistance, which should be new support. Okay, so somewhere between these highs here and these lows here. So that's a range. So I think that the ugliness you see, I think it's going to continue for a while until you get to the price levels that you knew in January of 2016. I think you're going to lose it all. And then you're going to have a vicious run, not all the way, maybe halfway up, and then finish it off. And the historic Great Depression era degree of decline will be over. You will have witnessed or experienced something nobody alive has experienced. All those people that were adults during that plunge during the Great Depression, they're dead. And as far as technical analysis goes in the Elliott wave theory, I call that wave two. And the only thing worse than a wave two decline is a wave four decline, which is where we are right now. This is wave four. Okay. Way back when we broke above here, when the price here broke above here, I made a projection that it would be in this general area where we are, that it would die. Okay. And I'm not the, again, there are books and other, institutes on every, what Elliott wave theory is, how to make these projections. So I'm just some YouTuber who watched some videos and read a little bit on it and started practicing it. But the leaders of this tenet of technical analysis, they've written many books on this type of stuff, and they've made these calls too. Some of them have made these projections about a wave four decline at this price level. Some of them have written these books 20 and 30 years ago, pointing out the price levels that we are right now, calling for this decline. Okay. So it sounds weird. I really didn't believe this crap in the beginning, but when I started trading with it, I'm like, okay, there's something to this. I don't understand why this thing works the way it does, but it's spooky, and it's just a little too right to be coincidental. Okay. And the only thing the explanation given is that there's a mass psychology of humans, sort of like the way those ants just know how to build the anthill, or the bees, they know how to, they go instinctively and get the honey or whatever, and for the colony, and it's like a pack behavior. Well, there's pack behavior among people too. And the price charts is just one of many ways you can see the herding behavior of people. It's something we're not even conscious of it, but it's just something we do. So if you can read about it. I think it's like, what's it called? Psychology. I think that behavioral psychology is like on that side of the academia. They deal with that issue. Even stores know this. That's why you get things priced at $9.99 and different things. It's because there's a psychology that we have about things being at a certain price that makes us respond. It's like deep research into how you can like reverse engineer, our psychology. I mean, everybody knows that. Even the dating community does that, but all that to say, that same type of stuff you already know from like pickup artists and stuff like that. Or that there's a psychology that of people that's reflected in price movement too. It's something about a trend that has gone a certain distance from its low point. There's some research about where we there are these levels where we begin to out greed. Even our greed starts to we start to come to our senses and go, okay, that's a little bit too much. And we do this collectively. We don't know why. And so this particular brand of technical analysis called Elliott wave theory looks at that. Now, I don't only trade Elliott wave theory. There are other things I look at too. There's another school just called price action, which is rules about these up and down squiggles you see here, and these former levels that the price couldn't break through. Then it finally did. So there's that. Then there's candlestick, how to read these candlesticks. There's a lot of different things that I combine, and you see it. One supports the other, but so that's the deal. That's where I think we're headed with this. Let's see. New screen. What else we got? Analysis, CL. All right. Are you a trader? Analysis. What's up, Kareem Austin? All right. See, I see analysis, CL. I think technical analysis. All right. I had 2 people in my Patreon group who are studying psychology in school, and they just wanted to learn how to trade, just to manage their retirement account. And I'm like, you really don't understand just how much this field or trading relates to your field, you know. So I got the link is at the top of the screen. If anybody wanted to hop on, I'll give you about a minute. If nobody hops on, I'm gonna get on out of here. Because the Black Brain Trust should be doing what they do at 8 o'clock. And I know some folks want to check that out. Let me get this screen share. Hit that link. If you want to hop on, you got some questions about trading, any questions about my opinion about whatever related to trading, hit that link at the top. What's happening, Rainy Woman?
Hi, Donald Will. Can you hear me okay?
I don't hear you.
You can't? You can hear me?
Now I do.
Okay, great. Listen, I just wanted to come on and welcome. First of all, congratulations on having a full house during your spring. I just wanted to come on and welcome everyone for coming over to the channel and let you know that Dollar Will has a very flexible schedule when it comes to his Patreon members and setting up different times for you. You can do individuals meetings, or you can also get involved with a group session as well. So I just wanted to come on and welcome everyone and thank you.
Oh, thank you, Rainy Woman, for clarifying that, because I'm doing a poor job of representing myself right now, but you got my back, and I appreciate it. That's right, because there are a lot of free videos out on YouTube, and there's some great stuff out on YouTube. And I even post some things from YouTube. Just, I refer, I don't have all of the information, and there are other people out there who I think are very good traders and very good teachers. And I, through my Patreon, introduce you some of those to some of those people. And I also do it because I want you to be able to understand what other people are talking about. From the things I teach on my site, I want you guys to have that aha moment where you go, okay, yeah, I understand what they're talking about. So that's another reason why I do that. But it's just so much stuff on YouTube, and there's so many conflicting styles. You really need somebody to kind of navigate that for you and walk you through it and say, okay, this is the main stuff you need to know. The rest of that stuff is optional. You don't have to learn it all. Most people, most traders, they have a style and a system, and nobody knows all of technical analysis. Technical analysis is a huge field with many, many different styles, and you don't have to learn them all. So, you just kind of, you'll see what the main thread is that combines all these different schools, and you just kind of go from there. And that's what I do. I try to give you the foundation, and then after that, once you get that foundation, you may choose to use some different forms of technical analysis that I don't, and that's cool. That's cool in the game. But from the basic foundation I'm providing you with, you'll be able to learn any other style. We're not talking months. We're talking days or weeks. You'll be able to understand. No, I would, yeah, days or weeks, but definitely not months, because you will have the foundation already there. You know, so get some help, y'all, because I know y'all want to retire. You know, your retirement statement, it's not likely to come to you until like April, and you see how fast this market is falling. This is your parents, especially for you folks out there that's 30 and 40 years old. You need to have that talk with your parents and say, wait a minute, you know what's up with your money in your retirement account? You need to talk to a financial advisor. Your retirement plan administrator, they you should be able to get a free meeting with them. They might be real busy right now because everybody's calling them, but you need to get in line and get that free help. um, there are nonprofits around, credit unions. um, go get that help. If your parents are near retirement, it's in your best interest that they get some of this advice, because if if they aren't able to retire, then that's like one more worry for you. You know, you're gonna have to your parents will become your burden if their retirement account is wiped out, and they're not thinking of this, because the S&P 500 and Dow has really risen like Superman since the early 30s. So we all, and the problem with that is during that period, we become apathetic. And uh strategically, the problem with that is just about any system will work, any strategy will work. The saying is the tide raises all boats, but it's only in times like this where hell is breaking loose do you really see what works and what doesn't. You know, but you're gonna have to go and push your family. You might even have to make the appointment for your parents to make sure that they get this advice. There's nothing wrong with sitting there. Again, this is just my opinion. Go talk to a financial advisor. There's nothing, if you know nothing to do, there's nothing wrong with moving your money into a money market account. So that I'm saying you keeping your money in the retirement account. You just moving, making sure that it's not invested in stocks. So you want to pick up the phone and talk to a financial advisor, or even the plan administrator at your 401k or 403b. If you work for nonprofits, you want to call them up and say, look, I'm concerned about how this market is declining. I mean, it's what should I do? Is can I move into a money market? So I mean, you're not talking about, I want to be clear, I'm not talking about withdrawing money. You don't want to do that. You don't want to do that. I'm talking about just moving how it's invested. And you got two things. You got your old money that's in there that's already parked in something. You want to talk to the financial advisor about it. It is safe for that money to still stay in stocks. You can move it all out of stocks. You can move it into a money market account. Now, it's not likely to grow much, but you won't lose anything. Okay. And that's not a bad plan, to sit there and just leave it static. Then now the next thing is you have your new money that goes in there every paycheck. You want to know where that's going to. It's not a bad strategy to just hide out in the bond fund, and as this market does its destruction over the next couple of years, you can begin to educate yourself while your money is safely out of the way of all of that stuff. And by the time the market gets to where it's going at the bottom, you will have protected your assets, and you will have educated yourself, and you'll have a mountain of money from this historic rise higher, and you'll have some knowledge to know what to do with it when you're at the bottom. That sounds like a great plan, but that's just my opinion. What's up, BGS? Welcome. I got the link up at the top if you or anybody else want to hop on. Like I said, I was really not trying to roll long because I know the brain trust doing their thing, but this is ugly, So again, for all you folks that said that we were practicing fear porn, I think we're vindicated. This couldn't be overstated. This is the Great Depression era degree of decline. This is quite ugly, you know, quite ugly. So I'm gonna sign off. Like I said, next week I'll have several a portfolio or two that I like. But we're waiting on I'm waiting on some things to settle, you know. Um, there's some things I like that they haven't fallen enough. And I mean, what really set panic to me is when before this market started declining, I went and looked at Walmart and Costco, and I was like, God, I mean, that's where you really need to be, but those prices are too high, and so that's what's making this market fall as fast as it is. The safe areas are not even safe because they've gone up too high. But at the rate we're falling, those spaces may get to their safe level quicker than sooner than later. Yeah. So all right, peace.